Good afternoon, everyone. This is Jeff Rumberg. I'm a managing partner with MetricNet, and I will be your host for today's webcast, The Zen of Support. I want to welcome all of you and thank you for participating in our webcast today. Before we get started, I have just a few administrative announcements to make. During today's presentation, all of you will be in listen-only mode. However, if you have any questions during the webcast, you can type them in the dialog box that appears in the lower right corner of your screen, and I will pause twice during the presentation to answer questions. Additionally, I will remain on the webcast at the conclusion of the presentation to answer any final questions that you might have or that I did not get to during the first Q&A break. The presentation usually goes about an hour and a half, so for those of you who have other commitments later in the day, I should be wrapped up by about 3:30 p.m. Eastern Time. Now, I see that quite a few of our existing clients have joined us on the webcast today, and I want to thank you for that. For those who are not familiar with MetricNet, let me give you just a brief introduction. MetricNet's core business is benchmarking. We perform benchmarks for a variety of industries and functional areas. My role in the company is to manage the service desk, call center, and desktop support benchmarks and client relationships for MetricNet. The work we do for IT service and support organizations worldwide spans the gambit, from benchmarking and best practice assessments to consolidation studies and outsourcing analyses. Typically, the support organizations that we work with are looking to optimize their performance, and we help them achieve that objective through benchmarking. Now, for those who have not been to our new website yet, I would encourage you to go and take a look around at MetricNet.com. One of the unique features of the website is that we offer a free membership that gives you unlimited access to all of our content. This includes our metric of the month, our webcast recordings, white papers, and presentations. All you have to do is complete a short form, and you will be enrolled as a free member. Each time you visit our website thereafter, you can go directly to our resource library to access all of our online content absolutely free of charge. Now, since the question of how to benchmark comes up in every webcast we conduct, I'll preempt that question right now and give you just a brief overview of MetricNet's benchmarking lineup. There are three ways that you can complete a benchmark with MetricNet. First, there are what we call peer group benchmarks that compare your service desk or desktop support performance to that of a unique peer group. These are our custom benchmarks, and they're very comprehensive in scope. The peer groups are selected from our benchmarking database based upon your organization's scope and scale, complexity, and geography. For example, it's common to select a peer group from your geography and vertical industry, and to also ensure that there is comparability in the number of contacts or tickets handled, since service and support is a scale-sensitive function. Secondly, if you're only interested in industry benchmarking data, you can download an industry benchmarking report directly from our website. Just go to MetricNet.com, click the Shop selection in the upper navigation bar, and you will see our service desk, desktop support, and call center industry benchmarks that are available for instant download. And finally, for those do-it-yourselfers, you can purchase a benchmarking data file in Excel format and conduct your own benchmarking analysis. Now, regardless of how or when you choose to benchmark your organization, I want to encourage all of you to connect with MetricNet on social media. We are active on all of the major social media sites. We put out a steady stream of posts and tweets, articles, discussions, and presentations that are designed to enrich the community of IT support professionals and to provide you with tools, insights, and information that you can use to enhance your professional careers. For those who would like to follow us on Twitter during the webcast, use hashtag MetricNetLive to participate and share your thoughts, key points, questions, or just follow along. One final note, and this is particularly important for those who wish to receive a copy of today's presentation. When you exit the webcast, a brief survey will pop up on your screen. Please be aware that only those who complete the survey will receive a copy of today's presentation. The survey gives us valuable feedback on the webcast. It's only 3 questions long, and it takes less than 10 seconds to complete. So if you do us that favor and answer the survey at the end of the webcast, I'd be very grateful. And in return for that courtesy, I'll send you a copy of today's presentation. Okay, let's go ahead and get started. Now, as many of you know, MetricNet's core business is benchmarking. I just mentioned that. Over the years, we've completed literally hundreds of benchmarks for service desks and desktop support organizations worldwide. As a result, we have the most comprehensive database of IT process, and performance indicators in the industry. Now, one of the advantages of doing that many benchmarks is that we have built the most comprehensive database of service and support metrics in the industry, and this data gives us a lot of insight into the key success factors of the industry's top-performing support organizations. And it's these insights, consolidated and synthesized into a model that we call the Zen of Support, that I'll be sharing with you today. Now, in case you're wondering about the title of the webcast, it comes from a book that I read when I was in college. The name of the book was The Zen and the Art of Motorcycle Maintenance. Well, at the time, I didn't know anything about Zen, and I still don't. I also, at the time, didn't know anything about motorcycle maintenance, and I still don't. But by the time I got through with that book, I understood pretty clearly what Zen and motorcycle maintenance had in common. By the same token, you may be wondering what Zen and IT support have in common. Well, one of my goals in this webcast is to make that connection clear so that, just as I did when I reached the end of the book many years ago, you'll also understand the connection between Zen and IT service and support by the end of this webcast. Now, to set the stage for our webcast today, it's worth pointing out right up front that everything you see and hear is empirical in nature. These are insights that we've observed and recorded in our benchmarking databases. There's nothing hypothetical, academic, or theoretical about what I'm presenting today. It's simply based upon what we have observed in the industry, having completed literally hundreds and hundreds of IT service and support benchmarks. Now, one observation that we've made is that service and support organizations tend to evolve through three stages. Newer support organizations, or those support organizations that have not evolved very far, tend to be very reactive. They tend to operate primarily by service levels. They are a slave to their service levels, in effect, and these environments tend to be relatively chaotic. So newer support organizations and those that have not evolved very far tend to operate in this reactive paradigm. But at some point, most service and support organizations begin to realize that there must be a better way to do things, and they begin to make investments in tools and training and technologies that enable them to become more preventive and more proactive and more strategic. And those that are the most successful at transitioning this evolution become what we call strategic stage service and support organizations. Now, the primary purpose of a strategic support organization is to make end users more productive and to drive a positive view of IT. And I'm going to show you data on this as we get further into our presentation today. Now, in this strategic stage environment, a preventive and proactive culture prevails. Service and support will anticipate user needs and expectations, and they provide services accordingly. One of the primary goals here is customer enthusiasm, not customer satisfaction. We believe that's a losing proposition, but customer enthusiasm and the creation of value. Now, one of the characteristics that these strategic stage support organizations almost uniformly have in common is that they operate and they think and they act like businesses. And like any good business, they do a number of things very well. One is that they create value for their users, for their customers. If you can't create value, you're not going to have customers. So a strategic IT service and support organization operates and thinks and acts like a business. They create value, and they also track metrics that enable them to keep score, to determine how much value they're creating and what level of service that they are delivering to their customers. They tend to be very proactive. They're not in any stretch of the word reactive. They anticipate user needs and expectations, and they develop and deliver services accordingly. And then, like any good business, they market themselves effectively. They get the message out there. They manage the message so that they can ensure that their end users understand what services they are delivering, and then they will deliver those services accordingly. So what we've done with these empirical observations is we've developed a four-part model that addresses these four criteria. How do world-class service and support organizations create value? What types of metrics do they use to track and manage their performance? What are some of the proactive behaviors that they engage in? And then how do they manage their message? We put these four elements together into this four-part model arrayed around the strategic objective of managing IT support as a business. So that theme will pervade today's presentation. IT service and support as a business. Thinking, acting, executing IT service and support as a business. Let's start with value creation and look at the three primary sources of value creation in IT service and support. Now, what you're seeing here on page 13 is the result of a survey that MetricNet completed a couple of years ago. There were more than 1,000 organizations that participated in the survey. They were largely large cap companies. These are big companies that you're familiar with. We offered a multiple choice survey to their end users, and we asked them, the primary question was, what factors drive your view of information technology? What drives your level of satisfaction with information technology? We allowed them 3 responses per survey, which is why when you add these up, you get more than 100%. Well, the somewhat surprising conclusion was that 85% of those surveyed, more than 1,000 organizations, said that the service desk is a primary driver of their customer satisfaction with all of IT. Another 47% said desktop support was a primary driver of their customer satisfaction with all of IT. Now, if you think about it, that may because your end users don't spend a lot of time with the NOC or the data center or the application development and maintenance people, but they do spend a lot of time with the service desk and with desktop support. They have frequent interactions with the service desk and with desktop support. And for that reason, you would expect service desk and desktop support to have a disproportionate influence on end user opinion about all of IT. And that's exactly what this data is showing. Now, if I'm a director or a manager or a chief technology officer or a CIO in an organization and I see this data, I know exactly what I need to do. I need to make investments in training and tools and personnel and my personal time and attention to make sure that service and support is delivering the best possible customer experience. Because this is the primary driver, the primary influencer of customer opinion for all of IT, not just for service and support, but for all of IT. And if service and support is doing well, that will reflect well on me personally as a CIO or a chief technology officer or a manager or a director in information technology. So one of the primary ways that service and support create value is by delivering positive customer experiences. That in turn reflects well on all of IT and drives customer perception and opinion for all of IT. The second source of value creation is the ability to return productive hours to end users. Now let me explain what we've got on this chart. We conducted a benchmark of organizations. There were a total of 60 of them that participated in this particular benchmark. We looked at their service desk and their desktop support, and in each of those areas we looked at 3 metrics. We looked at customer satisfaction, first contact resolution rate, and the mean time to resolve, again, for both the service desk and for desktop support. Now, based upon how they scored, we broke them up into quartiles. So there were 15 that ended up in the top quartile, 15 in the second quartile, 15 in the third quartile, and then 15 in the bottom quartile, based upon how they scored on these 6 metrics, 3 metrics for the service desk and 3 metrics for desktop support. Additionally, what we did is we asked end users within each of these organizations for a month-long period of time, for a 30-day period of time, to keep track of how much productive time they lost each time they had an IT-related issue. Whether they had an outage, the network was down, they forgot a password, there was an application that wasn't worked, they had a hard drive crash, whatever it was, just keep track of or estimate how much time you lose each time there's an IT service and support related issue. The interesting conclusion was this. For those end users that worked in a top tier or a top quartile service and support organization lost an average, when we extrapolated it out beyond 1 month, they lost an average of 17 productive hours per year. Those end users that were operating in a second tier service and support organization environment would lose an average of about 26 productive hours per year. In third quartile service and support organizations, the end users lost an average of about 37 hours per year. And in the fourth quartile, the bottom quartile of service and support organizations, their end users lost an average of 47 productive hours per year. Now look at the difference here between quartile 1 and quartile 4. If you're lucky enough to work in a quartile or top quartile IT service and support organization as an end user, you might lose on average 17 productive hours per year. Think about the number of devices that knowledge workers have these days. They have desktop computers, they have laptop computers, they have smartphones, they might even have a server or a printer in their office. And when these devices malfunction or do not operate as expected, there is lost productivity. Now sometimes there's a workaround, sometimes there's not a workaround. But these lost productive hours represent the time that knowledge workers lose on average over the course of a year based upon the quality of support that's delivered in their organization. The difference between a top quartile and a fourth quartile organization is a staggering 30 hours per end user per year. Think about that. If you have hundreds or thousands or tens of thousands of end users within your organization, a top quartile service and support organization has the potential to return an extra 30 productive hours per end user per year. That's enormous. You can quantify the value of that. If you look at the average salary that's paid to the personnel within your organization, multiply that by the number of hours that are saved, the economic impact can be staggering. And this is the single biggest economic impact, value creation, if you will, that a top quartile service and support organization provides for end users. The third source of value that is generated by a strategic service and support organization is the ability to minimize total cost of ownership. Now, what I'm showing here on page 15 is the average cost of resolving a ticket at different levels within the organization last year, 2012. The average fully loaded cost per ticket at level 1 was about $22. This includes all the agent salaries and benefits, all the supervisory indirect salaries and benefits for supervisors, team leads, workforce schedulers, and the like. It also includes the travel, the training, the office supplies, the technology, and the facilities expense. Take the entire cost of the level 1 service desk, divide it by the total contact volume, and you're looking at about $22 per contact, again, last year in North America. When a ticket gets pushed out to desktop support, the cost increases by $62. So these costs are additive. They are not cumulative. So if a ticket starts at level 1, you can expect to incur about $22 in cost. If it gets pushed out to desktop support, you can expect to incur an additional $62. If it goes to what we call level 3 or N level within IT, an application group, a networking group, a NOC, etc., you're looking at an incremental $85 to provide that support. If it gets pushed to field support, where you have to get in a truck or a vehicle and drive somewhere, you're looking at close to $200 per ticket. And when the vendor gets involved, you're looking at about $500 per ticket. So the cliche in the industry, not so much a cliche, but the expression, if you will, which is get it done at level 1, is not just a catchphrase. There's real economic value here. So when you think about value creation in a world-class service and support organization, and you think about running IT service and support as a business, think about your ability to drive a positive view of all of IT by delivering high-quality transactions at the service desk and at desktop support. Think about your ability to return productive hours to end users to make them more productive over the course of a year, and think about your ability to reduce the cost of service and support by driving down contacts or tickets, if you will, to the lowest possible level in this schema, and you can get them resolved at the lowest cost possible. Now that brings us to our first polling question of the day, and that polling question is about first level resolution. So the question is this: do you track first level resolution in your service desk? Do you track first level resolution? Now there's a difference between this and first contact resolution. First contact resolution says that it's done on the initial contact with the user. First level says that it's done at level 1, but not necessarily on the first contact. Okay, most of you have weighed in here. I'll give you another few seconds here. And while you're doing that, let me just welcome all of you. We've got people from all over the world today, including some who've dialed in the middle of the night from Australia, Singapore, Japan, India. Even those of you who are dialing in from Europe, especially Eastern Europe, it's late, quite late your time, so I just want to thank you for participating in our webcast today. It's our final webcast of 2013, and it's a real pleasure to be here and to welcome all of you. Okay, if you haven't weighed in on this poll, please do so. Do you track first level resolution in your service desk? Let me go ahead and close that poll down and share the results with you. Okay, 3/4 of you, 76% are tracking first level resolution, another 16% are not, and then 8% not applicable, presumably because you're not affiliated with a service and support organization. Now this is quite a marked change from when we started asking this question just 2 or 3 years ago, when these results were basically reversed, where maybe 15 to 20% were tracking first level resolution and the vast majority were not tracking first level resolution. But I think there's an increased awareness and understanding of the importance of first level resolution as it relates to total cost of ownership. In fact, first level resolution is a proxy for total cost of ownership. So for those of you who are tracking it, kudos to you. For those of you who are not yet tracking first level resolution, I want to encourage you to begin tracking that metric because, again, it is a proxy for total cost of ownership in service and support. So I'm going to close that poll down, and we're going to continue on now in our discussion of the Zen of support. Okay, the second part of our model here, we talked about value creation and the three primary sources of value, those again being the ability to reduce total cost of ownership by maximizing level 1 resolution rates, the ability to return productive hours to end users, and the ability to drive a positive view of IT overall. We're going to shift gears now and talk about metrics and how key performance indicators can and should be managed holistically and diagnostically to continuously improve the performance of service and support. Now, most of you have probably heard this expression before. If you're not measuring it, you're not managing it. Now, there are variations on this theme. What gets measured gets treasured. You've probably heard some of them, but there's really a lot more to the story that we want to talk about. Now, before I get to that, let me introduce some of the more common service desk and desktop support metrics. Now, I don't want to lead you to believe that this is an all-inclusive list. There are literally hundreds of KPIs for the service desk. Likewise, for desktop support, there are literally hundreds of key performance indicators. But the 25 most common KPIs that I run across in this industry are shown here on page 19. We've organized them into metrics that measure your cost, your quality, your agent productivity, agent metrics themselves, things like absenteeism, turnover, and occupancy. We've got service level metrics. We've got call handling metrics, and we've got a similar set of metrics for desktop support. We've broken these down into 5 categories because we've got a category for desktop support called workload metrics, things like the number of tickets per seat per month, the number of incidents per seat per month, the service requests per seat per month, and so on. Now, again, this is not an all-inclusive list, but these are among the most common KPIs that I find for desktop support. There are 30 key performance indicators here on page 20. There were 25 key performance indicators here on page 19. Well, this presents problems because what we found in the industry is that there's a lot of data out there, but there's not enough analysis being performed on that data. And as a result, if you're not doing analysis on the metrics and on the data, it's difficult to gain any insight. And if there's no insight, it's almost impossible to take any action that will lead to improved performance over time. And so what we found is that the historical approach to managing key performance indicators emphasizes measurement. In fact, 75% of the effort is focused on simply measuring the performance. There's a little bit of time spent on evaluating those metrics, evaluating the performance, even less time spent developing action items based upon that analysis. And as a result, there's very little action that comes out of this historical approach to managing key performance indicators. But as you can see from this arrow here, the value increases as you move up this pyramid. And so what we've seen emerge in the last 3 to 5 years is a very different approach to managing key performance indicators. We call it the holistic approach. And it essentially turns this pyramid upside down. It de-emphasizes measurement, and it re-emphasizes action. So you find a very little time spent on the measurement piece itself, more time spent on analysis, even more time and effort and energy spent on developing action plans. And finally, where the rubber meets the road, rubber hits the road, we see a lot of effort put into the actual action, which leads to change within the organization. So a small number of measures doggedly tracked and analyzed on a regular basis, action planning, but then action is what leads the organization forward and enables them to continuously improve. It's this holistic approach that we want to discuss here in this section of our Zen of Support model. Now, I'm going to submit that that long list of metrics that I just showed you is too much, it's too costly, it's too focused on pure measurement. And so when it comes to KPIs for service and support, less is more. And the ones that really matter for the service desk are summarized here on page 23. We've got cost per ticket and customer satisfaction. Those are called the foundation metrics. We call them that because everything you do in service and support boils down to one of two things, either cost containment or you're trying to drive a higher quality customer experience. Ultimately, nothing else matters. Cost and quality is the be-all and end-all in any service and support organization. Now, I know that sounds very draconian, but if you think about this, it greatly simplifies your jobs as IT service and support managers. Viewed through the lens of cost and quality, almost any decision becomes much, much simpler. I don't care if it's a decision about training or technology, new hires, a reorganization, or anything else. If it doesn't have the long-term effect of either reducing or containing your costs or improving the quality of customer satisfaction or customer support, then it just isn't worth doing. So we've got our two foundation metrics, cost per ticket or cost per contact and customer satisfaction, but they are driven respectively by utilization. This is a labor-intensive function, so agent utilization is what drives your cost per ticket, and then first contact resolution rate is what drives your customer satisfaction. So you need these underlying drivers to do a full diagnosis on an organization. If you find that there's a gap in cost or a gap in customer satisfaction and you're trying to improve those two things, you're inevitably going to find yourself drilling down and looking at agent utilization and first contact resolution rate. We then have a TCO metric, first level resolution rate, which we just talked about briefly. And then we've got agent job satisfaction. Now, we frequently hear the comment that that seems like an odd metric to include on the short list of the most important metrics. But the reality is agent job satisfaction is a bellwether metric. It has a secondary impact on almost every other key performance indicator in the service desk or in desktop support. It is positively correlated with customer satisfaction, meaning that the higher the agent job satisfaction is, the higher the customer satisfaction is. It's negatively correlated with cost, meaning that the higher the job satisfaction is, the lower the cost is. It's also negatively correlated with absenteeism and turnover, which means that the higher the job satisfaction goes, the lower the absenteeism goes, and the lower the turnover goes. So this is a metric for all seasons. It is truly a metric that has a ripple effect throughout the organization. And oftentimes when I go into an organization, what I tell my client is, if you're managing agent job satisfaction well, and we'll talk about how that's done later in this presentation, then almost everything else takes care of itself. So agent job satisfaction is, as a bellwether metric, is one of the most important metrics you can keep track of. Then there's what we call an aggregate metric. This is a balanced scorecard. I'm going to show you how to build one momentarily here. The reason this is important is because in service and support, you have a lot of moving parts. You have cost metrics, quality metrics, productivity metrics, and they're oftentimes moving in different directions. And month in, month out, or even quarter in, quarter out, or year in, year out, it's oftentimes difficult to answer the question, are we better off this quarter than we were last quarter, or are we better off this month than we were last month? And the balanced scorecard enables you to answer that question. Now let me also introduce the short list of desktop support KPIs. Once again, we have cost and quality as the foundation metrics, cost per ticket, customer satisfaction. And by the way, tickets are comprised of incidents and service requests. Two different types of tickets, but when you combine them together, you've got all tickets. So service requests and incidents. You've got customer satisfaction as your quality metric, utilization as your productivity metric, first contact res rate on incidents as your call handling or your ticket handling metric. You would look at mean time to resolve. Service levels don't make much of a difference for level 1 support, as you'll soon see. They do make a big difference for desktop support, and specifically your mean time to resolve has a strong impact on customer satisfaction. The TCO metric for desktop support is called the percent resolved level 1 capable. That's a mouthful, but essentially what it means is what percent of all tickets resolved at desktop support could have and should have been resolved at level 1. It's an important metric because those tickets represent defects. If you're resolving them at desktop support and they could and should have been resolved at level 1, it should have been pushed back to level 1, or it never should have been sent out to desktop support. The reason is that, as you saw a few minutes ago, the average cost of resolution at desktop support is about $62 last year, whereas the average cost of resolution at level 1 is only $22. So if you're resolving tickets at desktop support that could have and should have been resolved at level 1, those represent defects. And so the smaller this number is, the better. The larger this number is, the higher your TCO for service and support is going to be. You're also going to look at technician satisfaction for the same reason you look at it in level 1 support, and then there's a similar balanced scorecard that you can create for desktop support. Let me show you how the balanced scorecard is created for level 1 support. What we do is we pick what we believe to be the 6 most important key performance indicators to include in our service desk balanced scorecard. Cost per contact and customer satisfaction are the foundation metrics, and we've got agent utilization, first contact res rate, job satisfaction, and then we put a service level metric in here, not because it's important, but because everybody in the world tracks it, and people get uncomfortable if you don't include a service level in their scorecard. Now, we weight each metric according to its relative importance. we've overweighted cost and customer satisfaction because those are the foundation metrics. Collectively, they contribute 50% to the scorecard. Then we've got agent utilization at 15%, first contact resolution rate at 15%, job satisfaction at 10%, and speed of answer at 10%. All these, of course, add to 100%. We then, for a representative peer group of service desks, and when we put these scorecards together, we make sure that we identify a representative benchmarking peer group that is comparable in scope and scale and complexity and geography to the organization we're creating the scorecard for. We show the worst case cost per contact and the best case cost per contact, the worst customer satisfaction and the best customer satisfaction, and so on for each one of the 6 metrics included in this scorecard. Then what you would do is put your performance in the 3rd column from the right and calculate a metric score using this formula down here. We look at the worst case minus your actual performance, worst case minus your actual performance. That becomes the numerator of the metric. And then we divide that by the range, which is the worst case minus the best case. So this interpolation formula gives you a metric score that will range between 0 and 100%. If you're at the low end, as we are here for customer satisfaction, it says that you are only 39% of the way from the worst case to the best case in terms of customer satisfaction. If you've got a higher score, as we do here on speed of answer, it says that you're 73.5% of the way between the worst case and the best case. In other words, the 60-second ASA is much closer to the 13-second best case than it is to the 192-second worst case. So this metric score will range between 0 and 100%. It's an interpolation that tells you how far along the path you are from the worst case to the best case. The final step in the scorecard is to multiply the metric score by the metric weighting to come up with a balanced score for each one of the 6 metrics included in the scorecard. When we add it all up, we get a score here, 55.6%. Now, you look at this and you wonder, what does it mean? And the first time you put together a scorecard for your service and support organization, and this particular scorecard is put together for the service desk, not for desktop support, but you can put something together very comparable for desktop support. The first time you do this, you may be scratching your head and wondering, well, what does 55.6% mean? Well, it really doesn't mean anything the first time you compute it. However, when you compare it to other service desks or desktop support organizations, it starts to take on significant meaning. Here's the 55.6% that we calculated on the prior page. The average for this peer group is about 50%, which is what we find when we run literally thousands of service and support organizations through this algorithm worldwide. The average balance score is only about 50%. And you got tails running off to the right above 70%. You can see those over here. That's actually the left. And then you got tails running off below that, below 30%. But the average tends to be right around 50%. If you're above 50%, you're at least in the 2nd quartile. If you're above 60%, you're most likely in the 1st quartile. If you're between 40 and 50%, you're going to be in the 3rd quartile. And then if you're below 40%, most likely you are in the 4th quartile for overall performance. Now think about what we've done here. We've taken 6 fairly disparate metrics with the units of cost, dollars, units of percentage, units of seconds. We've normalized these, we've rolled them together, and we've created a single overall score for your service desk that enables us to compare you against other service desks that are comparable to yours. And it also enables you to track and trend your performance over time. If you update your scorecard once a month, as this company did, this is data from 2011, you can see how this service desk improved through the course of the year. The purple background here represents the trailing 12-month average. The blue bars, of course, represent the monthly score that was computed by this organization. You can see that over the course of the year, they improved from about 60% all the way up to close to 80%. That is significant progress. And again, we're not looking at a single metric. We're looking at a blended metric, an aggregate metric that puts together the cost, the quality, the customer metrics or the customer satisfaction metrics, the service level metrics, the agent metrics. We're rolling it together, creating that single overall score. It's an elegant tool that enables you to answer the question, are we better off this month than we were last month? Are we better off this quarter than we were last quarter? Let's look at the other metrics very quickly. We've already discussed the balance scorecard. What about cost per ticket or cost per contact, customer satisfaction, agent utilization, first contact resolution rate, first level resolution rate, and agent job satisfaction? Let's take a look at these, starting with the 2 foundation metrics. Remember, cost, customer satisfaction, nothing else matters. Viewed through that lens, it greatly simplifies management decision-making in service and support. Think about customer satisfaction and cost on a two-dimensional chart, as I've shown here on page 31. On the x-axis, we show cost, which is efficiency. On the y-axis, we show quality, which is effectiveness. The y-axis is measured by customer satisfaction. The x-axis is measured by cost per contact. However, the x-axis is somewhat counterintuitive in this sense. As you move to the right, we have lower cost. Move to the left, higher cost. That's somewhat counterintuitive. The y-axis is what you would expect it to be. As you move up the y-axis, you have higher levels of customer satisfaction. So the upper right quadrant here is the quadrant where service desks are both efficient and effective. This is the holy grail of any service and support organization, and this is where you ought to be operating. This is where you should aspire to be. You want to be both low cost and high quality, and it is possible, as you can see from the data points that are represented here. Now, those organizations that are in the lower right quadrant are low cost, but they're also relatively low quality. And over time, what they want to be doing is improving their quality and working themselves into this upper right-hand quadrant. Those organizations that are in the upper left quadrant are high quality, but they're also high cost. And what they need to be doing is reducing their cost over time and moving themselves to the right to get into this upper right-hand quadrant. And those that are in the lower left are both high cost and low quality, and they need to be operating on both dimensions to both reduce their cost and improve the quality of service that they deliver over time. So think about it this way. You're operating in a two-dimensional space, cost versus quality, and you always want to be asking yourself, is this decision, is this action, is this organization structure, this training, this technology, this personnel hire, in the long run, going to help us contain or reduce our costs? Or will it help us improve the quality of the customer experience? If it doesn't do one or both of those two things, you just don't do it. Simple as that. Let's drill down further and look at what drives cost per contact and customer satisfaction. As I mentioned earlier, service and support is a labor-intensive function. For the service desk, about 2/3 of your costs are tied up in personnel. This includes not only your agent salaries and benefits, but also the salaries and benefits of the indirect personnel, the supervisors, the team leads, the workforce schedulers, the trainers, and the like. So any serious effort to contain cost has to look at human resource productivity, and agent utilization is the biggest single driver of cost. Likewise, for customer satisfaction, the biggest single driver of customer satisfaction is first contact resolution rate. How do we know? Because the data says so. When we regress agent utilization versus cost per contact, you can see that as utilization increases, cost per contact goes down. That's not surprising. By the way, on these charts, the blue data represents data points. The red line represents either a linear or a non-linear regression through the data. In this particular case, you're looking at a linear regression. Now, the slope here is about 1 to 2, meaning that every 2 percentage point increase in utilization yields about a 1 percentage point decrease in cost. The reason for that is that agent salaries and benefits represent about 50% of the total cost of a service desk. Now, if you look at salaries and benefits for all personnel, agents and non-agents like supervisors, team leads, workforce schedulers, and the like, you've got about 2/3 of your cost tied up in personnel. But agent salaries and benefits, on average, represent about 50% of the total cost, which is why it takes a 2 percentage point increase in utilization to yield a 1 percentage point decrease in cost per contact. Let's look at the formula for agent utilization, because we're always asked this question. We look at inbound contacts handled by an agent in a month, multiply it by the inbound handle time. We add to that outbound contacts handled by an agent in a month, multiplied by the outbound handle time. And we divide it by the typical working minutes in a month. We look at 21.5 work days times the number of work hours in a day, which is typically 7.5. Multiply that by 60 minutes just to get the units right, and you end up in the denominator with about 9,800 working minutes per month. Here's an example on page 35 of calculating the agent utilization for an agent that's handling about 375 contacts a month, inbound, 225 outbound, 10-minute inbound handle time, 5-minute outbound handle time. You can see the math down here, works out to about 50%. And by the way, 50% is about the average agent utilization for service and support agents in a service desk worldwide. Now, a lot of people look at that and are shocked. It's like, well, we thought our agents were 80 or 90 or 95% utilized. But sometimes what you're doing is confusing utilization with occupancy or confusing utilization with schedule adherence, and they are very, very different metrics. Utilization measures phone in ear time divided by total time at work, or the analogous, if you're doing an email queue or a chat queue, it would be time in chat divided by total time at work, or time handling emails divided by total time at work. Now keep in mind, we don't back out holidays, sick days, vacation days, training time, administrative time, aux time, or if you put yourself in idle mode. We don't back any of that stuff out. This is a pure measure. We measure everybody worldwide in exactly the same way. The average utilization is about 50%. Now, let's look at first contact resolution rate versus customer satisfaction. Again, blue diamonds are data points, red line linear regression. Now the slope here is about 1-to-1, meaning that every percentage point increase in FCR yields about the same percentage increase in customer satisfaction. So there's a very strong cause and effect relationship between first contact resolution rate and customer satisfaction. Now let's drill down further and look at what drives agent utilization and look at what drives first contact resolution rate. The service levels, a lot of people are surprised to know this, but service levels have a huge impact on agent utilization. Let me show you how. Now if we look at average speed of answer, page 38, this is for a service desk again. We can look at comparable figures for desktop support. But if we look at speed of answer versus cost per contact, the lower the speed of answer goes, the higher the cost per contact goes. The same thing is true if we look at call abandonment rate versus cost per contact. The lower the abandonment rate goes, the higher the cost per contact goes. Now, you might wonder why. If you've ever worked in workforce scheduling, you'll know why this is true, because as you get more aggressive on service levels, if you go from a 60-second to a 30-second speed of answer, for example, you have to staff up to do that. And if you go from a 30-second to a 15-second speed of answer, you're going to add more head count. And if you go from 15 to 5 seconds, you're going to add even more head count. So as you get more aggressive on your service levels as measured by speed of answer and call abandonment rate, you have to staff up to answer the phones quickly and to keep the abandonment rate down. That costs money. So as you get more aggressive on service levels, you will see an increase in your cost per contact. Well, why would anybody do it then? Well, because most people are under the false assumption, or impression, I should say, that better service levels mean happier customers. And in desktop support, that is true. Service levels measured by mean time to resolve on service requests and incidents, that does have a big impact on customer satisfaction. But at level 1, it has no impact or very little impact on customer satisfaction. How do I know? Again, don't believe me, look at the data. What I'm showing on page 40 is, again, blue diamonds are data points, red line, in this case, nonlinear regression going through the data. What I've shown on the x-axis is ASA, not in seconds, but as a percent of total handle time. So this 10% dashed line here, if you have a 10-minute handle time, 10% of that would be 1 minute. If you have a 5-minute handle time, 10% of that would be 30 seconds. And here's what this chart is telling us, is that below 10% on ASA, you're wasting your money, meaning that if you push your ASA down to 5% of handle time or down to 1% of handle time, you don't gain anything in terms of customer satisfaction. That's our y-axis. We're looking at customer sat versus average speed of answer. ASA is a percent of handle time being the independent variable, customer satisfaction being the dependent variable. So this debunks the myth that aggressive service levels drive customer satisfaction. No, that's not true. As you get more aggressive on your service level, look at customer satisfaction. It does not change. So why would you spend a bunch of money to get to an aggressive service level when it does nothing for you in terms of customer satisfaction? Now, you can't take this too far, because when you get out to 11, 12, 13% ASA as a percentage of handle time, you will start to see a drop-off in customer satisfaction. That's what we're seeing here. So there's a sweet spot right in here for ASA and also call abandonment rate. Call abandonment rate somewhere in the 6 to 8% range. ASA somewhere in the range of 8 to 10% of the total handle time is what you want to be shooting for. Because if you let it go higher than that, you will see a drop-off in customer satisfaction. And if you push it lower than that, you're going to see an increase in your cost per contact. Now, the important thing here on ASA is that it is measured as a percent of total handle time. So when you call 411, the typical transaction is about 15 seconds. That's why you expect the phone to be answered in 1 or 2 seconds. You're not going to wait 60 seconds for a 411 call to be answered. However, most organizations or most people that work in companies understand that the total cycle time on a service and support transaction might be 20 minutes, 30 minutes, might be 10 minutes, but they're willing to wait a minute, sometimes 2, 3, or even 4 minutes. And they are willing to forgive you an occasional long speed of answer, and they're willing to forgive you an occasional abandoned call. What they are not willing to forgive is incompetence, as measured by first contact resolution rate. This is your driver of customer satisfaction, not service levels. Service levels drive cost, and only in extreme cases do they drive customer satisfaction, and they never improve it. They only reduce it, and that's only when your service levels get excessively long, like beyond 12% of your handle time for ASA and beyond 10 or 12% on abandonment rate. So this is the service level paradox. It's a paradox because so many people in the industry assume that they need aggressive service levels to get high levels of customer satisfaction, but nothing really could be further from the truth. So keep in mind that there is a sweet spot when it comes to service levels, and it generally falls at 8 to 10% of handle time for your ASA. Don't want to get more aggressive than that because you drive up your costs. Don't want to fall outside that range to the right because you'll start to see a drop-off in customer satisfaction. For abandonment rate, that sweet spot's in the range of 6 to 8%. Okay, let's move on and look at what drives first contact resolution rate. Not surprisingly, it's training hours. If we look at new agent training hours versus first contact resolution rate, we see the cause-effect relationship here, blue diamonds data points, red line linear regression. The more training the new agents get, the higher the FCR goes. Why do we care about that? Because FCR drives customer satisfaction. Training drives FCR, drives customer satisfaction. What about annual agent training hours? That is, after they've been fully trained and they're up to speed and they're working on the service desk on an annual basis, how many training hours do they get? All these blue diamonds over here on the y-axis are service desks that don't provide any ongoing training for their agents. These data points out here represent these levels of training, as you can see on the x-axis here, and you can see that the more ongoing training agents get, the higher the first contact resolution rate will be. Now, training historically was viewed as sort of a motherhood and apple pie thing. Everybody agreed it was good, but very few organizations walk the walk in addition to talking the talk. Everyone talks the talk. Yeah, training's great. We do a lot of it. It's good, you know, so on and so forth. But when it gets right down to it and you measure this, you measure the amount of training that agents get initially and then on an ongoing basis, oftentimes the rhetoric doesn't match, or I should say the actions don't match the rhetoric. But there's real value in this training, as you can see here. Initial training, the more you get, the higher the FCR goes. For annual training, the more the agents get, the higher the first contact resolution rate goes. So now we've got this build. We start with our foundation metrics. They are driven respectively by agent utilization and first contact resolution rate. You have this tertiary set of metrics, and then you've got agent satisfaction and its drivers, which I'm not going to discuss right now. I will get into it in the subsequent section. But what we've done here is we've gone through the two foundation metrics, their underlying drivers, and we've looked at these cause and effect relationships all the way down to the service levels. Now, this diagram is one of the more important diagrams that will be presented today because it does show the cause and effect relationship between the most important key performance indicators in a service desk. There's a very similar chart to this for desktop support showing the cause and effect relationship. Now, this is powerful because it shows you how these KPIs are interconnected and interrelated, and it helps you understand what levers you can pull to achieve desired outcomes. If you're trying to reduce your cost, you're going to look first at increasing agent utilization, and if you need to do that, you might look at the underlying service levels and ask yourself if those service levels are too aggressive. If you're trying to improve customer satisfaction, you are going to look first at your first contact resolution rate, and as a secondary cause, you're going to look at agent job satisfaction, and you'll see those correlations in just a few minutes here. So this cause and effect diagram is very powerful. It gives you the insight you need to pull the levers you need to pull to achieve desired outcomes, whether that desired outcome is an improved cost position or improved quality of service that's being delivered to the customers. This shows how the KPIs are interconnected and interrelated, and it gives you that insight into how you can diagnose any performance gap that might exist in your service desk. That brings us to our first Q&A session. Let me go ahead and open up. If you have any questions, please type them in the dialog box that appears in the lower right corner. Question from Peter. The question is, to measure agent job satisfaction, what would be essential questions to ask in any survey? Peter, we recommend surveying agents at least once a year. but no more than twice per year. The survey does not have to be long or complicated. It is usually just about 5 questions long, and each question comes with a 1 to 5 scale. The questions would be phrased as, well, let me give you an example of the types of questions. You're going to have one question on training and how good it is. You're going to have a question on coaching and how good it is and whether or not the agent receives enough of that. You're going to have a question about career path, and you're going to have a question overall that asks, are you satisfied with your position here at company XYZ? You let them answer this on a scale of 1 to 5. 5 says that, yes, I'm very, very happy. 4 says, yeah, I'm pretty happy. 3 says I'm sort of neutral. 2 says, I don't, I think there's a lot of room for improvement. And an answer of 1 says that I really don't like this job and I'm ready to get out of here. So you want to look at 4 or 5 questions. You want to measure the agents on a scale of 1 to 5. But it is critical to be doing this at least once a year, ideally twice per year. Again, it doesn't have to be a long, complicated survey. It doesn't take a lot of time to construct or administer. You can even do it in some of these online tools like SurveyMonkey. But if you're not doing it, I would encourage you to develop a survey and start tracking your agent job satisfaction. Okay, question from Wayne. Will the presentation deck be available? Yes, it will be, Wayne. We'll make that available to you after today's webcast. We do, however, ask you to complete the survey that will pop up at the conclusion of the webcast. It gives us valuable feedback on the survey, on the presentations and webcasts that we deliver. So we ask you to answer that as a precondition to getting a copy of today's presentation. Okay, question here from Chris. Do you advise on measuring agent utilization in a support environment with chat, phone, and email channels of support? The problem I have run into is when you have agents in chat and email at the same time, you get a blurred line of utilization. Yeah, Chris, that is true. If you've got agents working multiple channels, typically if they're working only the chat channel or only the voice channel, or they're working a combination of chat and voice, you've got an ACD or you've got a system that will track their talk time and their ACW, which is the after call work time. But if you're blending in an email channel, and they're working email and chat, or they're working email and voice, it's much harder to track the amount of time that they spend on those emails. And so of necessity, typically you have to make estimates as to how much time they're spending in the email queue as opposed to the chat queue or the voice queue. Very few organizations actually have labor reporting and management systems that enable the tracking of the amount of time agents spend in the email queue, although the time they spend in the chat and the voice queue gets picked up, as I mentioned, by the ACD, the automatic call distributor. So typically what happens is that they don't actually bring in an IE, an industrial engineer, but they'll bring in a person with stopwatches, and they will track the average time that it takes an agent to handle an email. And it's going to vary dramatically. Some emails are probably done in 2 minutes, and other emails might take an hour. But if you measure a bunch of these, maybe 50 or 100 or even 500 of them, using a stopwatch again, that's a classic time and motion study in industrial engineering, you get an average for the amount of time it takes to resolve an email. That's a pretty good approximation for the email handle time, and you can apply that against the number of emails that an agent is handling in a month. So in terms of workload, they handle 200 emails and 200 voice contacts per month. The average email is 10 minutes. The average voice call is 8 minutes. You can multiply those out and figure out what the total workload is over the course of a month. Okay, from Joe, how do you get honest, real feedback from end users on agent and end user interaction? Well, you survey them. Maybe I'm missing something here in the question. Honest, real feedback, if anything, end users are more than happy to give honest, real, and I'll say brutal feedback. If they've had an unpleasant experience with service and support, they usually don't pull any punches. So in terms of getting real feedback from end users on agent to end user interaction, yeah, a customer satisfaction survey, asking them about the quality of their interaction. You're not just asking them, for example, are you happy with your transaction? You're going to be asking them typically a handful of questions. Was the agent courteous and professional? Was the agent competent? Did the agent resolve your issue on your initial contact with that agent? Did the agent greet you politely? Did the agent close out the ticket and indicate that they felt the ticket was closed? There are a handful of questions that you ask in a customer satisfaction survey that will give you insight, deep insight, if you will, into what end users think about the quality of the agents that are delivering that service and support. Robbie asked the question, how often do you recommend surveying customers? You have to be careful here, Robbie, because you don't want to over-survey your customers. What we recommend is that no single customer should be surveyed more than twice per year. So your system has to make sure that you're tracking each time you send an email survey out, for example, to a given person, that you don't survey them more than twice a year. Like also, when you're surveying, you're going to be sampling. You're not surveying every customer that calls into the service desk. We recommend sampling anywhere from 1 out of 5 to 1 out of 20. It really depends on your user base. If you've got a large user base, you can probably get by with surveying 1 out of 20. If you've got a smaller user base, you're going to have to be surveying about 1 out of 5. And I can elaborate on that if you want to take that offline, Robbie, and give you a little bit more insight into that. Okay, there are other questions queued up, but I don't want to spend too much time answering questions now because I am going to stay on the call at the conclusion of today's webcast and answer any remaining questions that are queued up. So right now what I want to do is move on in our discussion of the Zen of support. We've talked about the 3 sources of value creation. We've talked about metrics and the fact that less is more, and metrics can and should be used diagnostically and holistically. Now what we want to talk about is the proactive behavior of these strategic service and support organizations. Now there are several common proactive behaviors that we find in this industry. There are literally hundreds of them, but some of the more common proactive behaviors are listed here on page 48. Things like root cause analysis or closed ticket analysis. The idea that you look at tickets that are coming into the service desk and ask yourself, how can we prevent these types of issues and incidents from happening in the future? Is better training part of the answer? That is better end user training, meaning if the end users are better trained, they're not going to have to call the service desk about this issue. Are there things we can do about an application, about the login, about a password reset? What can we do to try and eliminate some of these problems at their source? What we found is that effective root cause analysis programs can reduce and eliminate the inbound contact volume by as much as 15%. Brand marketing and brand management, we're going to talk about at length in the final section of our Zen of support model, so I won't elaborate on it right here. But business case analysis for new investments, that is ROI analysis, is very common. It's a very common proactive characteristic in world-class service and support organizations. Benchmarking, I'm going to get into that momentarily. Goal-based training, this is where you identify an area that needs to be improved. Let's say your first contact resolution rate needs to be improved, and so you develop specific training and training modules around the goal of improving first contact resolution rate. Cause and effect decision making, that gets back to this cause and effect diagram here, and making decisions based upon the implications of improving utilization, backing away from aggressive service levels, improving FCR, improving agent job satisfaction, doing more coaching, career pathing, training. That's what I'm talking about when I say cause and effect decision making. Managing agent morale and job satisfaction, I'm going to get into that momentarily. And then agent scorecards, that is the balanced scorecard that I presented earlier, can be repurposed and used to create agent scorecards where you drive accountability down to individual agents that work in service and support, whether it be the service desk or desktop support. You can create an individual scorecard that helps the agents understand on a monthly basis how they're performing and where they can improve their performance. Let's talk about benchmarking. This is an important proactive behavior because there is an almost one-to-one correlation between service and support organizations that benchmark on an annual basis and service and support organizations that are truly world-class. So now there's a chicken or egg question there, which is, are they great because they benchmark, or do they benchmark because they're great? And it's actually some of both. There are some world-class service and support organizations that got really good because they benchmark annually or semi-annually, and there are some organizations that benchmark because they're just really good. But it's unmistakable that there is almost a one-to-one correlation between those service and support organizations that benchmark on an annual basis and those that perform at a world-class level. Now, very briefly, benchmarking involves comparing your IT support performance to that of a comparable peer group. The more important piece of benchmarking, though, is this. That is, when you identify a performance gap, whether it's in cost or quality, customer satisfaction, cost per contact, first contact resolution rate, first level resolution rate, agent job satisfaction, you need to understand what drives that performance gap. Because if you understand what drives the performance gap, you can do something about it. You can act on it. And that's the real essence of benchmarking. You don't have to reinvent the wheel. You don't have to improve incrementally through trial and error. You can build upon the proven best practices of the industry's superior performers and improve your performance not at an evolutionary pace, but at a revolutionary pace. That's the real power of benchmarking. You don't have to reinvent the wheel. You can leapfrog ahead of all the trials and tribulations associated with incremental improvement, bypass all the blood, sweat, and tears associated with that, build upon the proven best practices of the industry's superior performers, and achieve world-class performance at an evolutionary pace. Now, benchmarking enables you to move on 2 dimensions at one time. On this chart, what I'm showing is cost per ticket on the x-axis. Quality is measured by customer satisfaction on the y-axis. Now, your typical service and support organization is going to operate on this dash curve. We call it the average performance curve. World-class service and support, or best-in-class service and support organizations operate on this upper curve. At any given cost, a world-class organization will achieve a higher level of performance. At any given quality, a world-class organization will achieve that quality at a lower cost than its counterpart that performs only at an average level. And what benchmarking enables you to do is squeeze this inefficiency and ineffectiveness out of the system. They say that there's no free lunch, but I would beg to differ. For organizations that are not yet optimized, meaning that they're not yet getting the best possible performance they can out of the resources they're spending, benchmarking enables you to identify those inefficiencies and move from this position that is a higher relative cost, lower relative quality, to a higher relative quality, lower relative cost. That's the real power of benchmarking, is that it enables an organization to reduce its cost and simultaneously improve the quality of service that it delivers. And that brings us to our second and third polling questions of the day. Those polling questions have to do with benchmarking. The third polling question is this: have you benchmarked your support organization within the past year? So as you're doing this, or answering that, let me just shout out some of the people that are on our call today. Vicki Strong, thanks for joining us. I'm just calling these names out randomly. Laura Sykes, great to see you here. Eric Thomas, thanks for joining. Eric French, glad you're here. Amy Heyman, great to have you here. Haroon Bhatti, great to see you. Mark Bainter, Martin Guzman, great to have you all here. It's a real pleasure to have you here. Okay, almost 80% of you have weighed in on this. Please vote if you haven't done so already, and I'll go ahead and close this poll down and then share the results with you. Okay, have you benchmarked your support organization within the past year? 34% of you answered yes, that is 1/3 roughly, and another 61% have not benchmarked within the past year. Okay, there's an associated question that I want to ask, and that associated question is, do you plan to benchmark your performance or benchmark your support organization in the future? And there are 5 possible choices here. Yes, within the next 90 days. Yes, within the next 6 months. Yes, in the next year. Or no, no plans right now to benchmark. So if you'd weigh in on this one, and then I think you'll find the result quite interesting when we compare this to the previous question. Have you benchmarked your performance within the past year? So about 60% of you have voted on this. So I'd ask those of you who haven't yet voted, do you plan to benchmark your support organization in the near future? You've got 5 choices here. Okay. If you haven't voted, please do so. And then I'll go ahead and close this poll down and show you what the results look like. Here we go. 24% of you, fully 1/4 of the people on this call, it's a pretty large number, are planning to benchmark within the next 90 days. Another 6% say within the next 6 months they're planning to benchmark, and 33% are benchmarking within the next year. Then 27% say that they don't have any plans to benchmark at this time. For those 27%, I'm hoping that that maps to the prior poll where 33%, I think it was, indicated that they had benchmarked within the past year. So if you've recently completed a benchmark, presumably you wouldn't be as inclined to benchmark in the coming year. For the rest of you who are planning to benchmark within the next 90 days, 6 months, or 1 year, I do want to encourage you to move forward with those plans. I think what you'll find is that benchmarking is probably the single best investment you can make in your service and support organization. The time, the energy, the dollars that you spend on benchmarking have one of the highest ROIs of any investment that you can make in service and support. So I do want to encourage you to move forward with that for all the reasons I just outlined, which is that benchmarking shows you how you can leapfrog ahead of all the incrementalism that typifies most improvement initiatives and improve your service and support organization at a revolutionary pace and achieve world-class performance in a relatively short period of time. Okay, I'm going to go ahead and close that poll down, and we're going to move on now in our discussion of industry best practices, and specifically what we're going to be looking at now. If I can get my pointer back here. Okay, here we go. Some of the common proactive behaviors. We already went through a short list. We talked specifically about benchmarking. Let's talk about this one. And the reason I chose the issue of agent morale or agent job satisfaction is because low levels of morale, poor agent job satisfaction is epidemic in this industry, unfortunately, and it drives high levels of turnover and a lot of dissatisfaction. And there's a common belief in the industry that agent satisfaction just happens. It's either bad or it's good, but you can't do anything about it. But that turns out not to be the case. There are things that you can do to actively manage agent job satisfaction and agent morale. Let's take a look, first of all, at this cause and effect diagram. I showed this a little bit earlier. The reason we care about agent job satisfaction is because it does drive customer satisfaction. It's a secondary driver behind first contact resolution rate, and it also drives absenteeism and turnover. Here we show the correlation between agent job satisfaction on the x-axis and customer satisfaction on the y-axis. Blue diamonds are data points. The red line is a linear regression through the data. Then on page 57, you can see that as agent job satisfaction improves, agent turnover goes down. Well, this is a high turnover business. On average in North America last year, the turnover was almost 40%. That is, the average agent only lasts about 2.5 years. 40% turnover is pretty high. Now, turnover is expensive. In North America last year, the average cost of replacing a frontline agent was about $10,000. That's the cost of finding the person, recruiting the person, training the person, bringing them down the learning curve because they're not entirely or 100% productive when they first start work, first start taking the inbound contacts. So it's expensive. And every time an agent walks out the door, unless they're terminated for cause, and even sometimes when they're terminated for cause, you see experience and expertise go out the door with them. So turnover is not such a good thing. And anything you can do to reduce that turnover is a good thing. One of the primary levers you've got to reduce turnover in this environment is to manage that agent job satisfaction. So there are 3 primary levers you've got here to manage agent job satisfaction. One of them is coaching, a second is career pathing, and the third one is training hours. Let's take a look at these. As the annual training hours increase, you can see that agent job satisfaction goes up. Okay. Also, when we put a career path in place, the blue diamonds here represent agent job satisfaction when there is a career path. The average agent job satisfaction is 80.7%. The fuchsia-colored squares here represent agent job satisfaction when there is no career path. You can see that the average here is 72.3%. So at least these 2 levers, training, that is both initial training as well as the annual training, can improve job satisfaction. It's a way of telling the agents that you care about them. That is, when you're willing to make investments in their training, in their long-term career prospects, if you will, it's a way of showing the agents that you're willing to invest in them, you're willing to bet on them. That drives up agent job satisfaction. Likewise, putting a bona fide documented career path in place also improves agent job satisfaction, and in combination, those will drive higher levels of agent job satisfaction, hence lower turnover, higher customer satisfaction, and lower absenteeism. So that brings us to our final polling question of the day, and that final polling question has to do with agent or technician job satisfaction, and the question is this: do you track agent or technician job satisfaction in your support organization? Do you track agent or technician job satisfaction in your support organization? 3 answers: yes, no, or not applicable if you're not affiliated with a service and support organization. Okay, a lot of you have voted on this. We're up to almost 80% participation, so if you haven't voted, please do so. Do you track agent or technician job satisfaction in your support organization? Let me go ahead and share those results with you. 38%, almost 40%, are tracking agent job satisfaction or technician job satisfaction. Another 56% are not. For those that are not, let me encourage you to take the initiative to do so. It's pretty straightforward to create an agent job satisfaction survey and to administer it. You can even do it in a simple Excel spreadsheet or a Google spreadsheet. You could also do it through a tool, an online tool like SurveyMonkey. One of the viewers today had a question earlier about this, and I shared my thoughts, my experience on this, which is that you need a relatively short questionnaire, just 4 or 5 questions. It only takes about 30 minutes to answer that questionnaire, so it doesn't reduce the productivity of the agents a whole lot. One thing I would like to add to that earlier answer, though, is that in addition to the questions that you ask the agents, you do want to give them a free-form field where they can tell you anything that they've got on their mind. They can tell you that they wish there was more training, that they would like to have a different shift, whatever it might be. You need to not just ask the 4 or 5 standard questions. You also need to give each of those agents and technicians an opportunity to share with you what's on their mind. And so you do want to include a free-form field in that survey. Okay, let me go ahead and shut this down. I'm going to close that survey, and we're going to move on now into the final section of our Zenith support model, and that is specifically about marketing. Now, marketing is a little bit of a misnomer. What we're really talking about here is managing stakeholder perceptions. Here we go. For some reason, my pointer's just not working well today. Here we go. Okay, now, we've probably heard this expression. Most of you have probably heard this expression. Expectations not set are expectations not met. And this is particularly true in service and support. So we need to be serious about this issue of managing expectations. I want to introduce to you a 2-dimensional chart here where on the x-axis I'm showing the actual value delivered by service and support, and the y-axis is the perception of value. You've got a number of stakeholder groups. You've got those who work in the service desk. You've got the end users or the external consumers or customers who call the service desk. You've got others in IT. You've got others in your company. You've got at least 4 or 5 pretty major stakeholder groups, and they all have their perceptions about the value that service and support is adding to the organization. Now, the only locus of points here that would make any sense is this diagonal line. This is where the perceived value is the same as the actual value. So if the actual value delivered is low and the perceived value is also low, well, that's a fair perception because you're not, delivering much value. By contrast, if the value you're delivering is high and the perception of value that you're delivering is also high, well, again, that's fair. So this diagonal is the fair, what we call the line of fair play, where the perceived value that service and support is delivering is the same as the actual value. Unfortunately, for most organizations, they tend to operate down here in the lower right. Now, I've painted this red for a reason. Red represents danger. This is a very common position, but it's also a dangerous position. I'll explain why in a moment. The green up here is not such a dangerous position. This is where your perceived value is greater than the actual value. The red down here is where the perceived value is less than the actual value. The reason this is danger is because decisions within an organization are based on perception, not reality. And if the perception is that service and support is not doing a very good job, decisions will be based on that perception, and they might be the wrong decisions. It might be a decision to insource that's not the right decision. It might be a decision to outsource that's not the right decision. And by the way, I'm neutral on that issue of insourcing versus outsourcing, but I do think if you're going to insource or outsource, it needs to be done for the right reasons. And this is why it's very critical to make sure that the actual value and the perceived value are one and the same. And if you are operating, as most service and support organizations do, down in this danger zone, you are living on borrowed time because the decisions that are being made about your organization are based on this perception, and that perception oftentimes is woefully wrong. And by the way, I've been doing this for about 25 years, and I have yet to see an organization that operates up here in the green, meaning that everybody thinks you're doing a better job than you really are. It just doesn't happen. And we all know why it doesn't happen. It's because whenever an end user or a customer or an external consumer has a bad experience with service and support, they tell 10 or 12 or 15 people. If they have a good experience, they don't tell anybody. That's just the way it works, unfortunately. I mean, it's almost a losing proposition when you think about it. It's frustrating at times. But the fact is, bad experiences get echoed many times over. Good experiences do not get repeated. And that is why it's very critical to manage this gap between perception and reality. Now, I want to be clear here. We're not talking about putting lipstick on the pig. In other words, we're not going to take a service and support organization that is not doing a good job and dress it up to make it look like it's doing a good job. No, we're talking about two things here. One of them is operational effectiveness. That's moving to the right on the actual value. And the other one is what I call brand management, which is managing this gap between perception and reality. What we want to do here is close this perception gap or make it as small as it can possibly be. Because if you are delivering good value, you want to get credit for delivering that good value, because the more you operate down here in the red, the greater the danger is that decisions will be made that are adverse to the service and support organization and are not in the best interest of the service and support organization. So we want to talk about how to manage this gap, how to close this perception gap. But again, keep in mind, we're not trying to disguise anything here. We're not trying to make bad performance look like good performance. We are simply trying to make sure that service and support receives credit for the high-quality services and the good work that they do. Well, we've developed a 5-part model. In fact, we deliver a half-day workshop on this a couple of times a year. The 5-part model addresses who the key stakeholders are, what we call the 5 Ws, what the key messages are in order to manage that perception gap, the timing, that is, when are you going to communicate these messages, the channels, where and how do you reach these stakeholders, and then a little bit of a tongue-in-cheek punchline here, why are we doing this? Let's take a look at these factors. In terms of timing, you want to be reaching out to your stakeholders frequently. At new employee orientation, there should be a short introduction, 5 minutes, 10 minutes, on IT service and support. At session logins, whenever a user logs in, there should be a notice about service desk hours, how you can reach them, click to chat, click to call, for example. During training sessions, I'm not talking about service desk training, I'm talking about training end users. There should always be a module on service and support. During an incident itself, while the incident's open, letting the customer know what's going on, because even if you break every record in the book in resolving their issue, if they expect you to do it in less time than you actually did it, they're not going to have a good opinion about what went on. So you need to educate them and let them know while an incident is open exactly what's going on. And then at scheduled sessions, much like what we're doing here, an increasing number of service and support organizations are scheduling these monthly webcasts where users from throughout the organization can listen in and find out what service and support is doing. Now, the messages you want to communicate, basic messages around what your services are, but also what are some of the major initiatives underway? Are you implementing a password reset tool? Have you recently implemented a remote diagnostic tool? You know the names, LogMeIn, GoToWebinar, Bomgar, and the like. What are your performance levels? And what are some of the FAQs? That is, where can they get these FAQs? Can they go online and download FAQs about service and support? And then, of course, what are your success stories? You want to let the end users know about success stories within your organization. Now, in terms of channels, you want to use every channel available. Quarterly newsletters or monthly newsletters, brown bag sessions, I just spoke about that, much like what we're doing here. Leave behinds like mouse pads, mugs, and the like. Surveys, that is customer satisfaction surveys, and communicating the results of those surveys. At login, letting the end user know how they can reach service and support. You can do webcasts like what we're doing here, having an FAQ site. These business unit liaisons, there's an increasing number of service and support organizations that are utilizing this idea. And the idea is this. Within an organization, you would have liaisons that act as the eyes and ears of service and support in different parts of the company. You might have one in human resources. You might have one in logistics. You might have one in sales, one in manufacturing, one in R&D, for example. And their job is to keep their finger on the pulse of the end users and what their thoughts are about end user support. And their goal is to communicate to those end users any outbound messages that you need to get to those end users, and also communicate back to service and support what those end users are thinking about service and support. So these business unit liaisons can be thought of as representatives or congressmen, congresswomen, if you will, who operate out there in the field or within the units, the divisions, the business units, and they act as the eyes and the ears of the end users for service and support. Now, it was more than a dozen years ago that a client sent this cartoon to me, and the cartoon reads, "Delight customers, why can't we just satisfy them like we used to?" And I opined very early on in this presentation that customer satisfaction is a losing proposition. Satisfied customers are not loyal customers. They don't necessarily want to do business with you. What you need are delighted or enthusiastic customers. And so when I asked the tongue-in-cheek question, why are we doing this? This is why we're doing it, because there's huge leverage here. Because if the quality of service and support is outstanding, end users will have a positive view of all of IT, not just a positive view of service and support, but a positive view of all of IT. So service and support is the gateway to IT for almost all end users. And that's a pretty important role, and it's a role that has to be managed very carefully and very effectively. Now, let me summarize what I've just communicated about marketing. Managing the gap between perception and reality is pretty straightforward. It doesn't take a lot of time, and it doesn't cost a lot of money. But what we found is that the success of your support organization depends as much on your image as it does on your actual performance. Now, think about that. The average service and support organization doesn't spend much, if anything, on managing their message. They don't spend much, if anything, on their image. Yet, what we found is that your success depends at least as much or about as much on your image and your message as it does on your actual performance. That's pretty significant. This is a high leverage opportunity to shape the message and, again, close any gap that exists between perception and reality. Now, the benefits of effective image management include you can improve customer loyalty and generate positive word-of-mouth referrals. It improves your credibility, which leverages your ability to get things done. If you need to make an investment in technology or you need to make hiring decisions, typically when that gap between perception and reality is small or non-existent, it's a lot easier to get this kind of thing approved. It drives a positive image for IT overall and ultimately leads to high levels of customer satisfaction. So let me talk about the Zen of support and see if I can close the loop on the initial comments I made. And I want to start by talking about what I call the paradox of IT service and support. And the paradox is this. Less than 5% of all IT spending is allocated to end user support. And I'm talking about the service desk, desktop support, and field support. So on average in North America, and this is true worldwide, about 4% of IT dollars are spent on service and support. The other 96% is spent on things like apps development, application maintenance, network operations, mainframe and mid-range computing, desktop computing, and various contract services like disaster recovery, for example. Now, as a result, because it's only a 4% or a 5% line item on the total IT budget, a lot of people erroneously assume that there's very little upside opportunity in IT service and support, which is why it tends to be managed as a cost center. That is, let's minimize this cost. It's a keep the lights on function. It's a necessary evil. Let's do as little as we can with service and support because it's such a tiny function. Let's squeeze everything we can out of it. And the result is that most support organizations are managed with the goal of minimizing cost. But as for those of you who were on our webcast 2 months ago on the ROI of service and support, you know that the most effective support strategies focus not on minimizing costs, but on maximizing value. Now, that's a very different concept than maximizing spending. We're not talking about spending money for the sake of spending money. What we're talking about is taking the limited resources you will always have, you never have enough resources, and deploying those in such a way that you maximize the value of what you deliver to your organization. Now, why does this matter? Because there's huge leverage here. Even though less than 5% of IT resources are spent on end-user support is the biggest driver of customer satisfaction for all of IT. That's why this matters. IT service support has the ability to return productive hours to end users, as you saw earlier. The difference between a first quartile and a fourth quartile service and support organization can be as much as 30 productive hours per end user per year. That's enormous. That's almost a full working week. So if you want to look at where the value is created, remember we're talking about a business model here. How is value created? It's created by driving a positive view of IT. It's created by returning productive hours to end users, and value is created by resolving tickets at the lowest possible level within the organization so that you minimize the total cost of ownership with service and support. Now, as we near the end of our webcast, I want to deliver a message to 3 very distinct and separate stakeholder groups. Now, the first group I want to address would be executives and senior managers. We've got quite a few of those on the call today. This would include CIOs, chief technology officers, and senior executives in IT. My hope is that this webcast is a call to action and prompts the necessary investment not just in tools and headcount and training, but also in the time and attention that you personally devote to customer support. What I've shown here is that the reputation of your entire organization, not just service and support, but all of IT, and by proxy, your success as an IT executive depends on how well you manage this customer interface. Now, the second group I want to address are support managers and supervisors. And I would simply ask you to think about service and support through the eyes of a business person. Adopt a business mindset. Now, among other things, what this means is that you compete aggressively for resources, just like any business does, and you use metrics diagnostically and prescriptively to establish performance goals based on industry benchmarks. And finally, that you make it your personal mission to demonstrate value to key stakeholders on a daily basis. That gets back to the message that I just communicated. Let's close the gap between perception and reality. Now, the third group I want to address are the frontline support professionals. And I know that being in that position, it's easy to get bogged down in the day-to-day minutia of service levels and performance goals and customer complaints. I would ask you to take a step back from that ground-level perspective and adopt a broader view of your role in the enterprise, because you're the gateway to IT for the vast majority of users, and your performance drives not only the customer's view of support, but indeed it drives their satisfaction with all of IT, as I've just shown. Use that opportunity wisely, because your actions as a frontline support person are magnified many times over as they reverberate throughout the enterprise. So what does all this have to do with Zen? Well, Zen is about truth and enlightenment, and what I've tried to do today is shed light on some important truths about IT support. Throughout your careers as support professionals, you're going to be inundated and bombarded with lots and lots of information, and my hope is that the framework I presented here, the idea of service and support as a business, that is, you create value. You create value. You use metrics to monitor your performance and to hold yourself accountable. You're proactive, and you develop specific marketing messages to manage your message. My hope is that the framework that I presented allows you to filter, synthesize, and interpret all of the information in such a way that it becomes more meaningful and beneficial for you, and that your career as an IT service and support professional will be enriched as a result of understanding the Zen of support. Now, in a minute, I'm going to get to the questions that are queued up. It looks like we have quite a few in the box here. If you do have questions, please type them into the dialog box that appears in the lower right corner. But before I do that, I just want to make a few closing remarks. First, I want to encourage all of you to take a look at our new website at MetricNet.com. As I mentioned early on, one of the unique features of the website is that we offer a free membership module that gives you unlimited access to all of our content. This includes our metric of the month, our webcast recordings, white papers, and presentations. All you have to do is complete a short form, and you'll be enrolled as a free member. And then each time you visit our website thereafter, you can go directly to our resource library to access all of our online content free of charge. I would also suggest that you connect with us on social media, where we put out a steady stream of information that IT support professionals might find useful. We have 4 LinkedIn groups as well as a LinkedIn company page. We also have 4 Google Plus communities and a Google company page. We're active on Facebook and Twitter, and we have a MetricNet YouTube channel. Now, in the copy of the presentation itself, we've provided links to all of our social media pages and groups, so you can get those there. Please don't forget to register for our upcoming webcast. Today marks the final webcast of 2013, but starting in January, we're going to be addressing service desk best practices, service desk KPIs in February, desktop support best practices in March, and then desktop support KPIs in April. I'd encourage you to go to our website and sign up. Please feel free to browse through our resource library on MetricNet's website, where you'll find a number of white papers, presentations, and magazine articles on IT service and support benchmarking and industry best practices. And for those who are interested in benchmarking, as I mentioned early on, there are 3 ways that you can complete a service desk or desktop support benchmark with MetricNet. First, there are our peer group benchmarks that compare your service desk or desktop support to a unique peer group that is comparable to your organization. These are our custom benchmarks, and they're very comprehensive in scope. The peer groups are selected from our benchmarking database based upon your criteria, scope, scale, service, and complexity, as I've mentioned earlier. Secondly, if you're only interested in industry benchmarking data, you can download an industry benchmarking report directly from our website. Just go to the shopping page on the upper navigation bar, and you'll see our industry benchmarks that are available by geography for downloading. And then finally, for those do-it-yourselfers, you can purchase the benchmarking data file in Excel format and conduct your own benchmarking analysis. Now, you can reach MetricNet in the United States at this phone number. It's 703-992-7559, or on our website, MetricNet.com, you'll find forms that you can fill out to reach us, or you can email us at info@MetricNet.com. Now, for those who have time to stay on for a few more minutes, I'll be answering any questions that you typed in during the webcast. And for those who must exit the webcast at this time, I just want to thank you for attending the session. I hope you found it to be informative and insightful. Please don't forget to complete the brief survey that pops up when you exit the webcast. This is a requirement if you wish to receive a copy of today's presentation. So I want to thank you once again. Let me take a look at the questions that we have now. Again, if you have questions, please type them into the dialog box. Okay. Question from Matthew. We have 5 agents across 2 time zones who need to take calls from all over the U.S. and Canada. Work tickets from our ticketing system allow for dedicated project time, emails, training, Gemba walks, and lunch. How do you work a schedule to best meet everyone's needs and time of day to allow at least 2 agents on answering calls every hour? Okay, 5 agents across 2 time zones. It sounds like you're stretched pretty thin, which most service and support organizations are, so that's not a surprise there. Given that you have 5 agents, that's probably not enough to justify an investment in what I would call workforce scheduling software. If you're 20-plus agents, typically an investment in workforce scheduling software helps to answer the question that you are identifying here. But one of the things I would caution you about, Matthew, is that when you've got 5 people working service and support, and you've got project work going on, you're supposed to be doing support, you've got the training, you've got all this other stuff going on, you might want to pull back a little bit from the non-support type activities, because it's pretty unusual. If you've only got 5 support agents, it's relatively small. When you've got 5 support agents and they're doing all this other stuff, you might be spread too thin. And their number one job, in my opinion, should be to provide service and support. And if that cuts into training time, if that cuts into, I've never even heard that word, Gemba walks, somebody tell me what that is if you want to type that in, because I've never heard of it. But if it's cutting into that kind of time, then so be it. But their number one job is service and support. Now, there's a possibility that you're understaffed. And now that I don't know for sure, because I don't know what the volume of contacts is that they are handling, and I don't know what the handle time is. But if you're understaffed, that's a different question. That can only be resolved by staffing up. That is adding another agent, maybe possibly even 2 agents. So it's hard for me to ascertain whether or not you're talking about an issue of being understaffed, or you're talking about an issue where you're simply covering too much waterfront. But if you're covering too much waterfront, meaning that you're spread too thin, you're doing too many things, my suggestion is focus first on delivering service and support. And then the second priority is likely to be training. Third priority, the project work, and it depends on how urgent and necessary those projects are. But you simply have to prioritize and use the limited resources you have as effectively as you possibly can to address as many of the different categories that you've talked about here, from support to training to emails and so on and so forth. So those are 2 possibilities. One, focus number 1 on support, and number 2, if you're really understaffed, and there's a way to figure out pretty quickly if you are understaffed, just go to the calculation that I showed earlier in this presentation on utilization, figure out what your utilization is, and if you're up over 60% on agent utilization, you're probably understaffed. It could justify an additional headcount. Okay, question from Mark. Will the recording be available to you later? Yes, we're recording this webcast, and we will make the link to the recorded webcast available to anybody who attends. So that will be available to you. Question from Chris. Do you have a listing of best practices or common questions for agent job satisfaction? Yes, we do. I would just encourage you to send me an email. Send it to info@MetricNet.com, and I can show you what the list of the common agent job satisfaction questions are. Okay, if you have additional questions, please type them in. It looks like I'm at the end of the list of questions, but I don't want to cut this off prematurely. If any of you have additional questions, please type those in the dialog box that appears in the lower right corner of your screen, and I'll do my best to answer those questions. Okay, looks like we're done. I don't see any additional questions, so let me again just say thank you. For those who attended our webcast today. Once again, I hope you found it to be informative and insightful. Please remember to complete the brief survey that pops up when you exit the webcast, because again, this is a requirement if you want to receive a copy of today's presentation. Okay, thanks very much. Goodbye now.